Many of you are denied your dream and your goal because you have a consistency versus an intensity problem. Consistency is when you do something. Intensity is how you do something. Consistency does not guarantee you the win. Many of you, as bad as you don't want to accept this, you never gonna win because you're not intense enough. And until you get intense to the point that nothing will get in your way, that you will not get in your way, you'll never win.
Guys, welcome back. In this video, I will teach you one of my day trading strategies that has been tested on high volatile assets like gold, Nasdaq 100 and Bitcoin. This video is a continuation of the previous video, so I recommend that you watch both of them to acquire a better understanding of the strategy. This full course will include technical strategy, risk management and trade management. The components of the strategy are just three. Number one, direction. We will only follow current direction on H1 timeline. Number two, where to trade from. There are two criteria here. One is identifying H1 fresh, valid order block. Wait for retest of that order block and still wait for single candle order block candlestick pattern. Or identify H1 liquidity rate and wait for single candle order block candlestick pattern. These are the two conditions that define where to trade from on H1 timeline. Okay. Number three, when to enter. Here we'll go to M5 timeline and wait for change of character with inducement grab plus single candle order block, or wait for change of character plus single candle order block but without inducement grab. I will illustrate everything. Don't worry if you don't understand at this point.
Institutional traders are taught from their first day that they buy good levels or they don't buy at all.
Before we proceed, guys, make sure to like this video and comment below which section of the video is not clear to you so that I can explain more. And also make sure to tell me which small market concept topic you want me to cover in the next video. So let's go ahead. This chart right here is an extract from gold on H1 timeline. Both current trend and current structure are bullish, making higher highs and higher lows. As long as price is sustained or is held above this level, we are buying only because bulls are stronger than bears. This right here is a fresh valid order block because it took liquidity from here and broke structure here. So let's patiently wait for price to come back to our OB zone. Meanwhile, we are patiently waiting. This is the definition of order block. Order block is a candle that took liquidity, broke structure and has imbalanced it. Candle color doesn't matter. In this example, this candle right here took liquidity from here and broke structure here. This is imbalanced it. In this yellow example, this candle took liquidity here and broke structure here. This is imbalanced it. I hope you understood it. Okay, let's go back to our chart. After some time waiting, price finally came back to our OB zone. And this is our single candle order block right there. So now we can go to M5 timeline for entry confirmation. If you don't know what single candle order block is, I recommend that you watch this previous video to understand everything. Do you still remember the condition that we look for on M5 timeline? Well, this right here is liquidity sweep and this here is change of character. In this case, remember, inducement is not necessary. because liquidity has been swept before change of character. Put your orders at 50% Fibonacci level or beyond. When you see single candle order block around that zone, like this one, as you can see here, orders were filled after some time at this order block zone. Stop loss must be placed below H1 order block zone. Take profit 1 is here at the nearest level, and then after that we have to break even the rest of the orders and then hold our position to maximize profits. So guys, before we proceed any further, if you don't know what inducement is, this is my own definition of what inducement is. When price is going up or down, the last valid pullback is inducement, and it acts like liquidity pool. Here, price went up, and this level is the last pullback, so we call it inducement. In this bullish move, this level right here is the last valid pullback, so it's inducement and it acts like liquidity pool. This chart was extracted from gold on 1 hour timeline. Current direction is clearly bullish, making higher highs and higher lows. This means that as long as price is sustained above this level, we should be buying only. If you come closer, this right here is trendline liquidity, and this candle's wick raided or grabbed the liquidity completely, and this is the single candle order block. Always wait for single candle order block whenever liquidity is grabbed or whenever order block is retested before scaling down to M5 timeline for a confirmation. So this is M5 timeline for entry confirmation. Here, this zone is H1 single candle order block area. So what are you seeing around this area? Well, upon retest of H1 single candle order block, this low was swept by this candle. This level is change of character, so we buy here after this single candle order block. Did you really understand that? Okay, look here. Price was dropping like this, and this low was swept, making this the last candle of the down move. Now, where do you think change of character should happen? You think here? Well, change of character is here, because this candle made valid pullback as well. And we have to be aggressive on M5 timeline when we are looking for entry confirmation. Because of liquidity sweep here, we don't need inducement after change of character. Just wait for pullback here and single candle order block here, then buy at this level. So after some time, the trade performed well. Remember guys, put stop loss below H1 or B zone here. Take partial profits at the nearest level, and then break even and hold the rest of your position to maximize profits. Guys, you have to take all setups without sparing any one of them, and always make sure to target a minimum of 2 risk-reward ratio on every setup that you choose to take. This right here is another chart of gold versus US dollar on 1 hour timeline. When current direction is as bearish as this, you know there is no chance of buying. There are 2 areas or points of interest here. This right here is a valid fresh order block, and this right here is equal high liquidity pool. After patiently waiting, this equal high liquidity pool was grabbed by this move, and this is single candle order block right there. Now there is no need guys to wait for this order block zone. We will just sell from this area. This is the single candle order block zone on 1 hour timeline, and change of character happened right here. This level is valid pullback and acts like inducement, and in this case guys, Inducement grab is very necessary because this high did not grab or sweep liquidity. So we place our orders here, just above inducement level. Remember to put stop loss above H1 timeline order block zone here. Take partial profits here at the nearest level. Then break even the rest of your positions and hold it to maximize profits. Remember guys, you have to risk the same amount of money on each and every setup that you choose to take. That's how you can balance your risk management.